Hey guys, welcome back to another episode of the Business Hour. Today I'm sitting here with Ivan from Estifo Chartered Accountants and Business Advisors. Welcome to the podcast.
Thanks, Charles.
Tell us a little bit about how you got into accounting and what chartered accountancy is.
What made me get into accounting? It's a good question. I've always had a passion for financial systems, accounting, economics, helping businesses grow, managing cash flow. I enjoyed the subjects at high school, so it made me want to do a business degree at uni, major in accounting. Then I went off to work for a couple of large accounting firms, and then got into my CA. Now, why I set up my own business is it's after a while of working for people, you get enough of the carrot dangling in front of your face. So then I wanted to do my own thing and helping clients grow and become successful, and I grow with the clients as well. So that's the reason that the difference between a chartered accountant and just a tax agent is that we, as a chartered accountant, you actually get a graduate diploma from the CA itself, where as a tax agent, they could be just a diploma qualified people. Most of them just lodge tax returns or do a bit of BAS work. Where we're more of an advisory firm. We advise clients on various aspects of business, from cash flow, business strategies, tax planning, and help clients grow as well as helping them minimize their tax.
Yeah. Okay, so we're obviously in strange times at the moment with all this COVID-19 going on. One of the common things that a lot of people are talking about is accessing their 10 grand from their super, which is going to be allowed to do twice. Should people be doing this?
Look, as an accountant, I can't give the advice whether you're allowed to access this or not. Before accessing it, I'd strongly advise that people go out and speak to their financial advisors just to make sure it's the right thing to be doing. At the end of the day, you are eating away into your retirement savings for your short-term needs. So in my opinion, and this is solely based on me, if I don't need to take the money out of my super, I wouldn't be touching it.
Yeah.
And it's just a provision for your retirement.
Okay. Another common question that we're sort of hit with a lot that people have inboxed us is in regards to these JobKeeper payments. What are some common misconceptions or mistakes that people are doing around this?
JobKeeper is a very, very new aspect or area that has been introduced in the last month.
Yep.
It's been put together very quickly as well, and it's changing very quickly every day. Every day we're dealing with this and trying to keep up with it and keeping in tune with seminars, ATO updates, just to stay afloat in this area. A lot of mistakes of people thinking of this is that how do you calculate a 30% drop? Now, there's quite a bit of guidance from the ATO in relation to this, but the ATO is saying that if your turnover has dropped, for example, April 2020 compared to April 19, if it's dropped by more than 30%, then you qualify. You don't have to keep retesting every month. And that's where a lot of people are finding it hard to understand, that they keep thinking that each month needs to be retested, and if you don't qualify for the 30%, then you're out. Once you're in, you're in. And when it's offered, you have to offer it to all your employees. You can't pick and choose which staff you offer it to.
Yep.
Okay? It's based on the JobKeeper nomination form. They need to advise the employer if they're entitled to this or not.
Yep.
Okay? There's a declaration there. They need to declare whether they meet the criteria or not. If they meet the criteria, then yes, they go on it. If they don't, then no.
Yep.
Okay.
And what are the tax implications of this? As a business, if you're receiving the JobKeeper payment, how is that classed on your balance sheet? Like, is that income?
Look, the JobKeeper payment itself, when it comes in, it does not have any GST on it.
Yep.
Okay. So there's no GST payable on the JobKeeper payment, but it will be assessable income.
Okay.
Now, the theory behind this is that, yes, for example, you're going to be paid $10,000 a month in JobKeeper payments, which that $10,000 is then going to be paid to your staff. Okay? So the net effect of that is nil.
Yep.
Okay? That's the rationale behind this.
Okay.
Okay?
Yep. So it comes in as income, but it's going out.
But it's going out again as wages again.
Yep.
Okay?
Gotcha. Okay. And are there any other stimulus packages that businesses can get their hands on?
Yes, there's obviously the cash flow boost.
Yep.
From the federal government.
Yep.
Okay. That's ranges from $20,000 to $100,000.
Yep.
And that's based on your withholding tax.
Okay.
So if you're an employer and you're registered for withholding tax.
Yep.
And you declared withholding tax on your March BAS.
Yep.
Then the offset will kick in. It's a minimum of $10,000.
Yep.
Okay. If your withholding tax for the quarter is less than $10,000, you'll get the full $10,000. If it's more than $10,000, you get the full amount above the $10,000. So, for example, if you're $15,000 withholding for the quarter, you'll get the whole 15. Okay. Now, if you're only withholding $3,000 or zero, you'll still get the full $10,000
as a credit on your.
It will be as a credit, yes.
Yep.
From your BAS.
Yep.
And then just to add on to that as well, the following quarter you get 50% of that, and the following quarter you get 50%.
Yep.
So for someone who's going to meet the minimum criteria of $10,000 in March,
yep,
in the June quarter they'll get $5,000, and then in the September quarter they'll get another $5,000.
Gotcha.
That's how you get your $20,000.
Okay.
Okay, and that's capped at $100,000.
Yep. Okay.
Now with clients who report on a monthly basis,
yep,
with their withholding tax, that's calculated slightly a bit different. For the month of March, they'll be paid triple amount of the March withholding tax, and then for April and May they should be paid the full withholding tax.
Okay.
So it's slightly worked differently.
Yep. So obviously we're in some strange times at the moment. What would your advice be to businesses in general that are, like cafes that can't trade, or whatever it is? How should they be preparing to relaunch and gear themselves up for success?
Look, at the moment, I mean, what the federal government's done is that they're trying to give a lot of incentives out there and keep businesses afloat. That's why they're giving out the cash flow boost to help people with their cash and manage their cash positions, so they can stay afloat when we come out of this COVID-19. Once we are out, business need a bit of liquidity in order to continue buying stock, materials, to continue trading. Once they are trading, they need to maintain that and keep pushing in the right direction to come out of this. How long this will take, it's unknown. It's just very new territory for everyone.
Yeah.
So you cannot base this but how your business traded last year or the year before, because we don't know how markets are going to react to this, how retail is going to react to this as well. The ATO has introduced a instant asset write-off of $150,000. This is an increase from $30,000. Okay, so it's a good opportunity now to get in and do a bit of tax planning before 30 June to work out if it's viable for your business to go out and buy an asset in order to claim an asset write-off for it, a complete asset write-off. Okay, so we don't have to depreciate it. If you buy an asset for $50,000, it's 100% deduction.
So let me just get that straight. So if you Last year, if you bought an asset for 50 grand,
Mm-hmm.
you would be able to write off 30 grand in year one.
No.
How much would you have been
So
able to
last year,
Yep.
okay, if you bought any asset under the value of $30,000,
Yep.
you can claim it 100%. You can claim the whole $30,000.
Okay.
If it was more than $30,000,
Yep.
so $50,000, you would have to depreciate it based on the ATO rates, depreciation rates. Okay?
So you would have to depreciate. You can't even though the threshold's 30,000, you would have to depreciate it according to their schedule.
That's
amount.
correct.
Okay.
Okay?
So right now, up to 150 grand,
That's
you
correct.
can depreciate.
Mhm.
You can write off instantly.
That's correct.
So you buy a $70,000 machine, you can write that off in your tax.
That's correct. For example, your profit is $75,000.
Yep.
And then you go off and buy an asset that's $75,000 worth.
Yep.
It's paid for. It's installed, ready to be used before 30 June. Your profit will be zero. And you don't pay a single cent in tax.
Wow.
That's one of the ATO incentives.
Okay.
Okay? That's why tax planning is very important to be done between now and 30 June.
That's more or less what we want to talk about in terms of the current situation. Some of the more general questions that we sort of had was businesses that are registered for GST are required to supply BAS statements. Can you give us an overview of what a business activity statement is, how often they need to lodge it, who needs to register for it?
Okay. Business activity statements are generally for people who are registered for GST.
Yep.
Okay. They need to be lodged once a quarter. Okay. The reason for doing that is to work out what GST needs to be paid to the ATO.
Yep.
Based on your sales and expenses. Also, what is included in there is the withholding tax for the staff, how much gross wages need to be declared, and the withholding tax on those wages. Furthermore to that, also what needs to be included is sometimes there's an installment activity statement, which is a prepaid tax on a quarterly basis that needs to be included as well.
Sure.
Okay.
One of the common questions we get is especially from startups, should they register for GST at the start? Like, how do you know at what point? So obviously, if you're not registered for GST, you can't claim the GST that you're paying.
No, you can't.
So,
but then you're also not paying the GST on the sales you're generating.
Correct. So what is there sort of a magic point where?
The law is, if you're going to be generating more than $75,000 a year, you need to be registered for GST.
Yep.
If you are not going to be generating $75,000, you shouldn't be registered for GST unless you choose to voluntarily register for GST.
To issue a tax invoice, do you need to be registered for GST?
No.
Okay.
Okay.
So are there any? So if someone say got a side hustle, they're baking cakes or whatever it is from home, and it's a registered business, they're doing 50 grand a year.
Mm-hmm.
Is there any advantage for them to register for GST?
By law, they're not required to register for GST.
Okay.
Because at the end of the day, if they are registered for GST, they need to be charging the GST.
Yep.
Which is 10% on top of the
a bit more accounting.
And that 10% gets remitted back to the ATO.
Yep.
Now, with the expenses, when they're paying for their expenses, they can claim the 10% as well on them.
Yep.
Okay.